Hey guys, it's Doc Severson for the TheoTrade report for Thursday, January 5th. All right, I'm looking at the S&P 500 here tonight, and I think we are in the final day of what I consider to be the calm before the storm. This has been essentially the third straight week of holiday tape with relatively low volatility, relatively low volume, and certainly extraordinarily low implied volatility. Now, as we've been seeing here for essentially about the last 3 weeks of trading, through these 3 weeks of trading, the price has essentially gone nowhere. And it doesn't matter whether I look at the S&P 500, whether I look at the Dow Jones Industrials, we're going to see essentially the same thing, although the Dow Jones Industrials have really gotten ahead of themselves. I mean, right now we're assuming that every single infrastructure project has been funded. We've seen a 2,000-point rally in the last few weeks here. That's about 11%, or about the normal gains that you'll see an entire year have occurred in just a few weeks after the rally. So it's no surprise that we're seeing a little bit of consolidation here, actually very tight consolidation. This is normally a very bullish sign. However, if this cannot break out to the upside with any strength, and I don't believe that there is going to be any strength to an upside breakout. Yes, we may see a 20,000 print here, which will finally get Bob Pisani off the ledge and quit reporting on it. Not that anybody's watching that, hopefully. But once we get that over with, I just don't see any sustaining power behind that move because of the fact that we have not only the monthly but also the weekly chart in absolute exhaustion right now. And what they could benefit from is an extended sideways move or perhaps even a down move here. And looking at some of the catalysts that we certainly have the potential for that as we look over the next couple of weeks. So not only the Dow has gotten ahead of itself, but also the Russell 2000 has gotten way ahead of itself as well too, with a 20% rally recently, a 20% rally. Okay, so for all the gains that we saw yesterday, they've just about been given up. This is very typical behavior for price that's building a lot of energy but can't get anywhere to the upside with that. So if it can't get anywhere to the upside, it may have to actually take one step back to take 2 steps forward, if that makes sense. So what do we see on the horizon that's going to be these landmines that we speak of? Well, there's a couple of things that come into play. First of all, tomorrow is non-farm payrolls. Okay, so there we go. On the 6th, we have non-farm payroll, so also known as the jobs report. So that's going to come out at 8:30 a.m. Eastern Time, 7:30 Central. And right now they're looking for about the same number as before, about $1.75 or so in terms of jobs. Honestly, I don't think it's going to be that much of a market mover. The market has already priced in the fact that we should be moving forward. Certainly we know that, rate hikes are going to be present within 2017. There's a great deal of optimism compared to previous years with that. So having the non-farm payroll number coming out tomorrow really doesn't mean anything because it's all, just basically part of the 2016 results for that. And we all know where those have been for a number of years. So where the risk starts to come into play here is the earnings cycle. So the fourth quarter earnings cycle starts on or about Monday the 9th after market with Alcoa and really starts to begin there. And you can start to see that we sort of tiptoe along for the first week or so next week. And then we get into some of the big heavyweights in the financials like Bank of America. We also have JP Morgan that's out there as well as Wells Fargo. These are definite market movers, especially with the fact that we've had the financials completely going berserk to the upside, right? So there's been a lot of expectations priced into those. Normally the market responds well to earnings, but can they push out above their very extended flagpoles at this point? So that is a big question mark right now for the financials. So we're going to be watching that one carefully on the 13th. And as we get through the rest of the month, probably the next big event that occurs here is the inauguration of the next president here occurs on the 20th. And so we are going to see a continuing drumbeat getting closer and closer to that point, and you're going to see more and more policy directives coming from the new administration coming into play throughout this week and definitely into this week. So it's not going to happen in a quiet manner. There's going to be an ascending crescendo that hits into the 20th for that. So don't look for any all of a sudden a step function there on the 20th. It's going to build into the 20th, and then it's going to run from there. So as we get into the last week or so of the month in January, it just continues to hit there. Look at the number of stocks that are reporting earnings here. 264 here. We got 53, 112, 149, 291. So the majority of the S&P 500 will be reporting within this area here, as well as the fact that we will have a brand new administration in there, and certainly will be very, very aggressive in terms of policy changes. There will be a lot of things happening in Congress. So looking at this, we are going to have one volatile month of January. And right now, a lot of the good news is already priced in. So with that in mind, however, the one good thing with that is that if we look over here to the volatility futures, we're going to see that buying some downside protection has never been, well, not never been, but is relatively cheap right now. So buying downside protection is cheap right now. And generally what we're going to be, until we start to see volatility expand again, is we're going to be net buyers of options in the near term. Whether or not we're going to be looking to take things higher or lower, we're generally going to be net buyers in the short term. Now, there will be a time and a place to be a net seller of options, but that will be as volatility expands. This will be as the range expands and gives us some more edge, perhaps to the downside, before we turn into, at least for the time being, at that point, to be net sellers of options. Now, before I go tonight, I want to bring to your attention a couple of statistics here. 45% of Americans are making New Year's resolutions, perhaps yourself as well as one of them. But did you know that only 8% of people out there are actually successful at achieving these New Year's resolutions? So yeah, I know why we do it. I mean, we want to create a fresh start. We want to put the year behind us. We want to learn something from the old year and then look towards the new year with sort of a sense of optimism and a chance to reset that button and start again new. But again, only 8% are successful with that. So chances are that traders fall into the same statistical grouping as all Americans like this. So that implies that 55% of traders are not even trying to set goals as we get into the new year. So, of course, those that don't even set goals have a 0% of achieving them because they haven't defined them to begin with. But let me give you somewhat of a controversial statement here. Goals are for losers. Systems are for winners. Now, that quote actually comes to us from Scott Adams, the creator of Dilbert, the cartoon about the workplace. And he's actually written a book about this to show why that those who create systems around performance far, far, far outperform those that just simply set goals. Because goals, as we have just shown, are very unlikely to be achieved. So if you'd like to know how to build a system around your trading and not just build goals, which you only have an 8% chance of hitting, I'd like to invite you to join me this Saturday with our 2017 Plan or Get Slaughtered class with me. It's going to be a live session starting at 10 o'clock Eastern, going till 1 o'clock. So more than 3 hours of live material will be going over, as well as several deliverables that you'll get at the end of that. So the class is only going to cost $97 as one time, although it is included if you do join as a 12-month membership for Total Theo. So some of the things that we're going to talk about here is how to turn these initial goals and desires into a structured, repeatable system for achievement, a system, one that you can use again and again. And by doing this, you're going to unlock the power of your trading brain this year. You're not going to be fighting against yourself to perform. And we're going to be doing this by creating business plans, creating clear and easy to follow trading plans for each strategy, balancing those different strategies across your entire account, finding the root cause errors in your trading strategies that are robbing profits, and in doing so, make yourself more of an owner of that strategy as well. In essence, what you're going to be doing is turning yourself into a performance machine for 2017 through this continuous improvement system. So this is going to include sample traders' business plans, sample trading plans. We're going to show you how to pick apart your strategies and performance through your journaling to understand how and what to work on to improve your performance. Now, as an added bonus for this time only, we're going to be giving you my earlier class from 2016, which is Top 10 Skills for Growing a Small Account, which was another 3-hour class, but it's also good for any size of account. It just happens to be particularly useful for those using small accounts and larger. So if you've gotten to the end of 2016 and you weren't happy with your performance and you're just simply setting goals for what you want to do in 2017, that might feel like a good first start, but again, an 8% success rate is not going to get you there. Please join me this Saturday with a 2017 Plan or Get Slaughtered class. The people that do show up are going to be the ones trading against you with their system. So join us for $97. It's an excellent investment. Hope to see you there, and thanks for listening tonight.